Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone is doing well. We are one day closer to tomorrow's FOMC meeting, which means whatever we think we know, we're about to get an update from the man himself, Jerome Powell, and we'll hear about what the FOMC's plans are for rates the remainder of the year. Now, remember, this isn't about reality, it's about perception. And as long as we keep that in mind, we can go in with either short-term time frame to about noon to 2 p.m. tomorrow. So I'd like to be in a position where if I have open swings, and I do, if I have open swings, I have the optional targets or the ability to move to a break-even stop, or even just closing out the trade before Powell says and does whatever he's going to do during the press conference. The rate statement will have some importance. We'll talk a little bit more about that tomorrow, and I'll show you how to look at the two statements to quickly compare what it is that was released versus what it is that the previous one did. So we'll do that tomorrow, but keep in mind that countdown sands are running out of the hourglass, so to speak. So again, be aware of these hot zones, these volatility events. What else is going on this week? We actually have other data, but it really doesn't matter. It might have some short-term impact, but much like I like to call it guillotine syndrome, who wants to stick their neck too far out in front of Powell? And yet, in the backdrop, we have the S&P in an uptrend. We have the NASDAQ, take a peek, quite supported. And it's hard to be bearish up here, right? It is. It's an uptrend. So what's the difference between wanting a pullback, which is the basis of my career, and being a bear? One is about whether or not I'm willing to be a buyer, and the other is about whether I'm willing to be a seller. More specifically, in an environment like this, NASDAQ, S&P, in any stock, in any sector that's in an uptrend, uptrends mean we can buy the dip. Now, we have to be aware that not all dips are created equal, and many dips are going to be triggered by a catalyst, like tomorrow at 2 and 2:30 p.m. But as long as the NASDAQ can keep the uptrend, I'll be open to buying the dip because the trend should, as long as I'm acknowledging the increased volatility, the trend should stay the same. Abrupt monetary policy shifts, which the Federal Reserve typically does not do. Abrupt monetary policy shifts are what put in those V tops and V bottoms. So that simply means the probability after a pullback is continuation of the trend that is, right? So let's keep that in mind as we go into tomorrow. And as always, if you have any questions, feel free to type them in. And good morning, of course, to our Simpler Trading YouTube, my YouTube at Raghee Horner. Of course, my folks watching on Twitter, X, whatever that's called now. And of course, our Simpler Essentials room. All right, so let's get to it. Good morning, good morning. First question is ARM. All right, ARM. Let's take a look. And if you have a question, let me know what time frame you're looking at. Let me know if you already have a position or you're managing one, or you're just simply looking for one. ARM is at, right now, as you can see, about 139.22. So it's pulling back a little bit from the 139.91 close from yesterday. Now, if something's sitting at a high, and this is, right, whether it's the high for the week, whether it's the high for the month, the year, what have you, I won't be engaging a trend at the highs. I mean, that's an easy one if you've been watching Charts and Coffee for any period of time. I won't be a buyer here. However, we look down here, is this a buy the dip environment? It absolutely is buy the dip. So I need a dip. I need a retracement. Now, a retracement could be to my price movement range. A retracement could be to some EMA. The retracement could be my mean reversion down in here. The retracement can be maybe this minor low to this minor high, and I'm looking for maybe a 50% retracement of the last major move. I mean, these are all potential retracements. It's not a matter of right or wrong. It's just what have you tested? And what have you found when scaled out across, and I'll tell you this, a minimum of 25 trades to test a variable, 100 trades to test its veracity. So when we think about say a 50%, which does work pretty well, especially within the context of a trend. That would be one way to look at it. And, one of the things, so we're in summer, right? And I know a lot of folks start to slow down their activity in summer, which is great, right? Your best trading seasons are probably winter to late spring, and then, back at fall. So summer can be a wonky time. Probably not this summer, because we do have all-time highs. We do have a monetary policy shift at some point coming up. We do have, an election. So there will likely be more attention and participation through summer. But one of the things I like to do in summer is kind of have summer school. I know that doesn't conjure up pleasant memories, but being in summer school, but I think a lot of you, especially if you're tuning into Charts and Coffee, you want to get better. And one of the things we love to do, and this is what I literally envision, while everyone else is chilling by the pool, this is where, we put testing and courses and learning to work. So when we get back to that main season again in fall, we are hitting the ground running. In fact, we never even did much more than just get better over summer. So I've heard it called separation season. I don't know who coined that, but I love it. Summer is separation season. You don't have to put the pedal to the metal, but just improve over summer. Find those nuances that are maybe going to make the difference. So we like to do summer school. In summer school and Sector Secrets Mastery, we're going to get into a little bit more of futures, which we've been doing anyway, but we're going to dive into a little bit more of the nuts and bolts of that, including what the Lorna bot does in the Sector Secrets Mastery. And I know many of our members do, which is the options on the futures, as well as the options on the ETF. So if I'm looking at something like ES, we're also talking about options on SPY, options on SPX, things like that. QQQ, options on the NASDAQ futures and the NASDAQ ETF. So those are things we want to do. And then probably as we get into August, we'll talk a little bit about, what are those tweaks we need to make so that come fall, come that basically Labor Day, we are able to just really capitalize on that last quarter, taking advantage of pretty much the last quarter of the year. All right. So getting to ARM, again, pullback, Munair, and then think about what it is usually you want for a pullback. Okay. All right. Crocs, CROX. Hey there, Eddie. All right. So as a day trade, I don't see it's 9:07, Eddie. I have no idea. Yeah. So thank you for the question. Let's open up the 5-minute chart and I'll give you maybe some possibilities. So first of all, Crocs is pretty darn strong, right? Had a good strong continuation off pretty much a mean reversion and the 21 propulsion. So if you're wondering, Rog, what preceded, because that's really important, what preceded this move on Monday? A test of the 21 right there and a very close test of the mean reversion. So this is the zone. That's the zone. That's where we're thinking about building a long position with either shares or long calls, whatever it is that you like to do to take advantage of a bullish market. As far as a day trade goes, I'm not going to look at the pre-market in something like Crocs, which is very inactive, as you can see. So I don't know whether we see some profit taking around 155, whether we see a pullback more significantly. I won't know until about 9:40. So I won't take yesterday's rally bearishly. I mean, this is a bullish market. So I would say I would largely prefer to be bullish, but I don't know if that's what the day trade's ultimately going to provide, because if there are opportunities to be short in an overall uptrend, it would only be as a day trade where I'm looking for follow through for maybe an hour or so, maybe a little bit longer. But you can see here we're opening down at 152.95. So that's already telling you something, right? We're already seeing maybe an early look at maybe some profit taking after yesterday's move. But again, I want to see some patterns. I want to see some reads in the first 10 minutes or so after the bell, and then that'll give me a better understanding of what it is that Crocs is going to do. All right. So that is Crocs. And by the way, that would be for anything except for the futures contracts. Let's go back to futures for a moment. So futures trade nearly 23 hours a day. And if there is anything that I could take this and then apply it to maybe a little bit of a pre-market edge, that would be the ETFs that are directly associated with it. So if we're talking about getting a jump on the morning, it's going to be in things like S&P to SPY, NASDAQ NQ to QQQ, say ZB to TLT, GC to GLD, things like that. And you can see here we have a neutral environment on the ES. Not surprising. I'm not expecting a lot of lower lows. I'm not expecting a lot of higher highs before 2 p.m. on Wednesday, because again, it would make sense for the market to go into a kind of a holding pattern, a wait and see mode, where we don't know what Powell's going to say. We don't know what the shifts in the rate statement are going to be. And we certainly don't know what he's going to say during the press conference, during that Q&A portion. So let's just remember we're likely to stay in a range. Now, there might be some things that really don't care about Powell. And that list would probably start with NVIDIA and Apple. So NVIDIA already has a trend of its own. NVIDIA already has a narrative. It's been moving fine, even without the clarity. Sorry, I'm filling up my water bottle here. There we go. It's moving along fine without the clarity of the rate cuts, which we frankly are likely to get, maybe one or two, but we don't know when, right? Probably November, December, maybe September. That's definitely just a maybe, but NVIDIA doesn't care. Apple's another one that has an event of its own, and that's the WWDC. Now, for traders who remember our Apple position, we had a very nice move in Apple that we took advantage of until last Friday. So let's talk about events again, right? So if I'm looking at an event like Apple, and it was widely anticipated that they would release some kind of their own version of AI. I guess they call it Apple Intelligence. And it is kind of cool. But if Apple has run up, much like NVIDIA did, in anticipation of an event, for NVIDIA, it was the split. For Apple, it's Worldwide Developers Conference. Then we don't want to be in Apple until the dust settles. In fact, buying a higher high on Friday would be rather painful. Instead, what we do is we scale out of the trade. We had April. We had June 7 expiration, and now we'll look to rebuild potentially that position after, as you can see here, it's revisited the price movement range. So think about these events. FOMC 2 p.m. is no different. Let that timing help you, right? So we're always looking for a price trigger. A price trigger is timing, and timing is trading. So if we keep that in mind, let the calendar, let the time of day help you out with the timing of the trade. Have a price, and then try to use the timing to dovetail to give you the best entry possible. So those are things that we would look for. The expectation play into an event is usually the best part of the play. This applies to splits. This applies to events like Worldwide Developers Conference. This applies to earnings. So the cleanest setups we'll see in anticipation of an event is in front of the event, not necessarily playing the event, right? So that's where we sit right now. All right, next up, crude oil. Sure, crude had a wild day. Crude pushed both the standard deviation of the support and the standard deviation of the resistance. Okay, Rag, what does that mean? So there's a typical price movement range that crude oil moves within 68% of the time. So almost 7 out of 10 times, 7 out of 10 sessions, we're going to be inside a certain range. About 30% of the time, we're going to be outside of that. Usually it's going to be an event. Whether crude oil was geopolitical, whether crude oil was the undersupply narrative that Goldman Sachs put out yesterday, which is to say, crude oil or gas, most specifically, may not be in a supply amount that would necessarily reflect summertime driving demand. I don't know how long that has legs. And so we basically faded that move. Now, I say fade, but this was simply a correction of a downtrend. And I'm looking for that downtrend to at least correct 50% of what happened yesterday. That would be kind of an initial litmus test. If I don't see about 50% of yesterday's move taken back in crude, I'll probably look for an optional target or just look to get out, because crude's in a different environment in terms of maybe whatever news could influence it from leaving the downtrend that it's in right now and maybe moving into more chop. But as long as I'm looking at dominant red candles, let's take a look at something similar to Monday, the 10th. Take a look at the action on the 28th. No doubt there was some kind of news, right? And within the context of the downtrend, and you can see what happened. So that's exactly what I'm looking to take advantage of there on crude. Thanks for the question. And that's coming from our Simpler Essentials room. Michael, that's what I'm looking for. I'm looking for more movement to the downside. If I don't get it, I will pull the trade. It's okay to say the narrative that I expected, the reaction to, I should say. If I don't get that reaction, we let it go. And that's the difference between just putting a trade on and just waiting to see what happens, and putting a trade on knowing what the volatility and the validity that I'll accept is. Where is this trade no longer valid? What kind of volatility will I accept? So that's where I sit in crude right now. And by the way, if you are a Sector Secrets Mastery member, every single day, right after the close, I send out a recap of what we did, the price that we got, what we're in, what was closed, targets, and so that every single day everyone can watch that 4 or 5 minute video, say, all right, this is what we did yesterday. This is how we're positioned going into, for example, Tuesday. And then we're all on the same page. So check out those recaps if you're a Mastery member. And it's a really easy, quick, ongoing narrative to what we're doing. And what we did, we took some optional targets in Walmart yesterday, took a trade from $1.60 per contract to $2.50, $2.55, took an optional target out. We moved to break even. And then now the plan is to see, well, can Walmart continue? But I'm doing so from a break even stop now. So I'm managing my trade a little bit more aggressively for two reasons. Walmart was pretty volatile on Friday, pretty reasonably behaved on Monday. And then I've got Jerome, got Powell tomorrow. So keeping that tighter leash makes a lot of sense. All right. What else do we have here? Questions. So that's how I'm managing crude. And NVAX. Okay. All right. NVAX. So start with the structure. It's neutral. It's both. We can have a bullish environment in terms of sentiment and in terms of momentum, but still have a neutral trend. And that's what NVAX is. So I'm going to think a little differently about a non-trending but bullish daily time frame like NVAX. I would most definitely be looking pretty much long only, but probably from a more conservative level, or looking at levels where it's been willing to pull back and then bounce from. So 14, maybe 12, but anything under $12, Munair, would be something that I have found is far better to look at through the lens of, no, not that. There we go. So NVAX would be something I look at through the lens of volume, price-based volume. All right. So what I want to see maybe for the last quarter. So there's the last quarter. Okay. So where is the support for the last quarter? See, so I go back to April, and you can see there the point of control is at about 12 and change. There's a little bit of support here at around 15 and change. So I would say even more important than price on something sub 20 is volume. We cannot be alone in our trades, gang. The reason we get in is because we're expecting to be maybe early, or certainly not late, but we're looking to be early to mid in the midst of a move. And that means that there are other traders, investors, market participants that will come in after us and continue to move the market. So we're never right in a trade alone. And the best way to understand if we're alone or not is to look at size. Who else is looking at that price? How much commitment is at that price? Will that price be responded to? Because there have already been trades placed there. And that's where price-based volume is something we use a lot in the mastery. And many of our tools incorporate that. Not what time of day was their volume. That's really not that useful. But at what price? So instead of having the histogram along the bottom, more of a calendar-based or time-based histogram, take a look at the volume histogram we look at on the vertical axis. Price-based volume. All right. Christina asks, how can I join Sector Secrets? If you head on over to sectorsecrets.com, you can get all the information about joining our team of traders over there and see what we're doing. There are 4 things that we do in the mastery, by the way, Christina. We day trade in the morning. We also set up swing trades, and then bot scalping a few days a week. So if you want a little bit more active short-term type approach, we do that as well. And then we also have our position portfolios. And I forgot to mention, We just bought McDonald's. I forgot to put that in the recap yesterday. I'll add it in today, Mastery folks. So we just bought for a longer term position McDonald's. And again, that's really long term. That's a time horizon of months, if not years, like some of our other position portfolio setups have been. All right. As always, gang, thank you so much for joining us for Charts and Coffee. I'll see you tomorrow, same time, same station. Be good to each other.